right, all right. How are we doing, everybody? Wait for a minute till some of you pop on here. Turn my heater off. It's Monday, and it's a great day. Let me double check my notes over here. Okay, pound dollar, Bitcoin, Senate passed bill, Iran open Hormuz to, okay. All right, everybody. Well, good morning. Happy Monday. Happy 6:30 a.m. Central Time, March 16th. St. Patty's Day is drawing nigh here in the States, one of our big celebrations. Dang right, Algo. My trading week's already began, guys. It began before Monday even got here. As you can see, my lava lamp back here, it's on the green side already, so that's good. Saturday night, which I'll get into it in a second. Was it Saturday night? Saturday night. Friday night. Friday night or Saturday night? I already forgot which one. I think it was Friday night. Yeah, there was a bill passed in the Senate to ban the federal government from issuing and crediting a central bank digital currency through 2030. So that was something that was kind of added in as a rider, if you will, into another bill. You know, they like to tuck things away in bills and hide them. I don't know if that was the intention, but that kind of is what happened. But anyway, they passed that, and I jumped in on a Bitcoin trade right away since we were getting a bullish signal on the edge finders. So we'll get into that more in a second. But yeah, guys, it's been nothing but distractions for me the last couple of weeks or so. I do have some good news to report, though. Okay. It sounds like I was given an offer on that position that I'm seeking. So I got that email yesterday. I think I might have mentioned that last week when they gave me my last interview. They said no by Sunday. So yeah, they sent me an offer. So yesterday I replied to that offer, and sounds like I have a position. So it's just a matter of, playing around with the details, and contract, that kind of thing. But hopefully all my distractions are over with. So I'm super excited about that. But anyway, yeah, we're good on that. I'm just waiting on an email. You know how it goes, right? Just like when you're trying to buy a car, right? You gotta wheel and deal a little bit. So that's the process that's going on as we speak. So anyway, sorry for my absence on Friday as a result of partially that, but we're good to go now. So, but yeah, let's get into this Bitcoin trade. So let me get my chart shared real quick over here. Window, screen. All right, there we are. There we are. Yeah, as far as Bitcoin, okay, again, +7 score. It's not something I normally do on the weekends, getting into trades, but when it comes to Bitcoin, I'm okay with that because unlike, the Forex market or any other indices or other assets, we can get in and out of a trade on a Friday since the market's open 24/7. So yeah, one of the rarities, but again, when I found that, and I'm trying to remember, I just want to look and see, what was that bill number? HR 6644 was the bill. 21st Century Act. So that was the bill. But again, this was tucked in. Vivek Ramaswamy was the one that actually released this tweet, if you will, over on X. Breaking: United States just passed the bill to ban the Fed from creating a central bank digital currency. This is a massive win for Bitcoin and for freedom. So it was an 89-10 vote in the affirmative. And again, it includes that provision banning the Fed from issuing or creating a central bank digital currency until December 31st of 2030. The bill itself was mainly about housing, supply and affordability, those kinds of things. And again, this was actually tucked in as a rider. So it's going to have to go to the House of Representatives now. And they may need to do some changes. We all, that's kind of how they do. Whenever they get a bill, they kind of toss it back and forth from the House to the Senate like a football, like a hot potato, if you will. And everybody wants their little piece. Everybody wants their little share. But nevertheless, it passed. So it's not a bill yet ready for President Trump to sign. They just have to do their hot potato game between the House and the Senate. But that's a huge first step, just passing one of the chambers. So I saw this, guys, at 2 a.m. This was Friday night. Yeah. 2 a.m. shortly before I was getting ready to go to bed. So when I saw that, I thought, well, my gosh, that's good. I mean, that's just the boost you need to get into an asset or get into a trade like Bitcoin, giving us that +7 over here. So anyway, I got into that, and it didn't really take too long, guys. I mean, it was about a day or so trade. Let's go look at our chart over here and have a look. Okay, that happened right here on this candle. Okay, so 1 a.m. 1 a.m. was when that happened. But if we dig a little deeper, well, actually, first, if we take a look. So it started off, guys, I was looking at this 4-hour indecision candle right here. Okay, that's where we were at. So this candle here had pushed price through and broken structure over here to the left and closed, and then kept going before it obviously had a retracement. So that was the basis for me looking at this 4-hour indecision candle as a demand zone. So let's turn my drawings back on, and we'll go down to the smaller time frames. Now, there's not a ton of liquidity at this time, right? So anyway, price with the 4-hour demand, you see we got a little 1-hour demand zone tucked away in here. Okay, and that's why I put that white dash line. So we had dropped into that area, and I do believe if I go over here, I just want to go look at my actual chart that I placed the trade on. I just want to see the exact spot. Okay, so yeah, it was actually the candle right after where we got into the trade. Talking about this green candle right here. So basically, I saw price just barely wick in to the zone, as you can see right there. Okay, just a subtle little thing, just barely. It's just teasing. It's just flirting with the demand, but it did pierce into it, and then we got a really strong bullish close. Now that's a red candle, so most would think that's a bearish candle, but it's not. It's a bullish candle because of where we closed within the range. Pull my jacket off here real quick. Right, we closed at the top, or not the top, but probably about the, what do you want to call that? About the 80% percentile of the candle. Yeah, a nice bullish, close. So I basically got in on the next candle. That was really all I needed to see, was that bill passing. Okay, so it got into that trade, and then as you can see, the rest is history. It just kind of slowly came up. I did have a supply zone here I was kind of a little bit worried about, but I actually closed out about the middle of the zone. That's where I had my target set. I do believe. Let's go to a 1-minute time frame and see where we close that at. Yeah, I'll just go into a 1 minute to see. So we actually got a little deeper into the zone. Okay, we actually closed on this candle here. So a nice shove up. Did end up piercing through the rest of the supply. Went a little higher. But at the end of the day, at the end of the day, it was a good trade for a weekend, right? It's not bad at all. 1,200 on one account, 6 something on another, 500 on another. So the week has started off well, ladies and gents. Pretty happy about that. And as far as Bitcoin goes, it's still giving us the +7. So, kind of maybe keeping an eye on this area here is another potential spot to get back in. Okay. As we wake up here in the States and New York opens up, they're going to see the same bill. Okay. And not to mention all the traders. So, I like to think of it as I took the trade while everybody else was sleeping. Take advantage of the thinner liquidity. So anyway, yeah, we're done now with this zone. Thank you very much for paying me. I'm going to color it light green, just telling me it's already been hit. It's already been touched. And now we'll just keep an eye here. I mean, we got close right here on this wick. We got really close, but we did not touch the demand yet. If I zoom in a little bit. By the way, I got a new mouse, a new wireless mouse on my laptop here. And it works like a charm. So you'll see there, we just missed it. So it's still fresh, still a fresh demand zone. And at this point, I need to put an alert on. Yeah, my trading computer over here to my right. It's obviously got a brand new mouse since the computer's new. And it works like a charm. And the mouse I was using that I thought would be better on my laptop, which was a cable mouse, a mouse with a cable on it. The wheel just kept like messing up. So I went to Wally World yesterday and it got me one, and it's working awesome. So this should be a lot quicker now, moving in and out of stuff, moving in and out of my charts, which I just find fascinatingly awesome. And it's a quiet mouse too. When I click, you can't even hear the clicking. It's one of those it's one of those noise-free clicker mouses. So anyway, I thought that was pretty good. But anyway, yeah, I'll keep an eye on this area now as far as Bitcoin goes. 1, 2, 3, 4. That is technically 4 basing candles. So if I look at this big expanded range candle as my leg end candle, well, then I'm looking at 1, 2, 3, 4 basing candles. Now, you guys hear me say, or you've probably heard me say, that I prefer it to be no more than 3 basing candles. So this is actually, this is 1 candle more than I would prefer. But if I don't use this demand, then I'd have to go all the way down here. And I just don't like the volume picture as much. Yeah, we have a yellow candle if we're looking at this demand right here. Let me just zoom in for you. Okay. We do have a yellow candle, but it's still relatively small. And we're talking Saturday evening here in the States anyway. That's Saturday evening, that's Saturday evening trading action. And that would also be early Asia. But again, it's Saturday, and that's actually Sunday morning over in Asia. Now, you guys know crypto is very, very popular in the Asian countries, just is. But it's also a Sunday, so I don't know that I'm too excited about this. Okay, I've already, I was more interested in the demand zone that I got it in, but I feel like that would probably be a little bit too much of a retracement at this point. I would have been interested in this price area here when price was still in this area. I would have been interested in that for a possible long. But as you can see, price kind of consolidated and pushed higher. So at this point, I don't think I'm very interested in a return to this price area here. As far as this one here, you guys clearly see that big red candle on the leg out candle. Okay, that's good. That's showing me that we've got some good, strong pushaways here, even though it is a Sunday, right? That's a lot of push away. It's a lot of power coming out of this area, out of this demand. So that's part of the reason I am, keeping an eye on this. And not only that, but this consolidation is what broke the structure. Now, it didn't close on that or the next candle, but it did close on the candle 2 hours after that. We had a close. So because we did have that close, that's, I'm interested in the zone a little bit. I would have preferred, guys, in all honesty, for just because of the time of the weekend and, where it's at on the curve, I really, really would have preferred this first candle to be the one that closed up here ahead of this swing top and, slash supply zone. But it didn't. It took a couple hours later. But it still closed higher. It's this candle, it's still closed above the 50% range of the candle. So that's part of what's keeping me a little bit interested in it. But yeah, I mean, my goal is always to talk myself out of an area, as silly as that sounds, right? I want to be picky with this stuff. So if I have to look at the reality of the red flags, it's that 4 basing candles, which is 1 more than I like. And that current candle was not the candle that closed above the swing high / supply zone. Again, it took a couple candles. And not only that, but if we're now measuring this as the swing low, as far as where I actually got in the trade for my profit, okay, this is now high on the curve. So let's just let's do this. We're going to go swing low to swing high to swing low. Okay, that's in the middle, right? That's diddling in the middle. I like discounts, so the best discount is down here. But the issue is, I think at this point, I'm probably going to be more interested in other items. I mean, if I want to, if people start waking up here in the U.S. and Canada and the Americas, put it that way, then they're going to start reading this Senate bill that passed, and they're going to see that it's good for Bitcoin, and there are probably going to be some people potentially pile into Bitcoin here, okay, because it is a demand zone. And with a very strong leg out. Again, the red expanded range volume spread analysis candles. So I've got my alert there. I will definitely potentially enter it if we get some strict, rules passed. I need price to pull in. I need my 50 to stay above my 200, which it is. Okay. There's my 50 and down here's my 200. But not only that, I would want to come down to a 15 because I really want to see on a 15-minute time frame. I really want to see my 200 start getting up into the zone. So, if I had it my way for me to get into this again, I would prefer to see some price action, something like this. I'd like to see price push up higher, close above this, and then come down to the zone for a possible buy. Because by the time price does all this and comes back, then what's going to happen is my 200 is slowly going to start to come up here, right? Something like that. So then I would want to see price pierce the 200. Okay. Of course, who knows how it'll look, but that's ultimately what I want to see. Now, obviously the 50 would remain above the 200. Okay, because that's not enough time for price to be going the opposite way on the smaller time frame or on the faster moving average. So I really need to see something like that because what it's going to do by this price action pushing up, following this green line, okay, it's also going to introduce sell orders down here as liquidity for these buyers down here. Okay, these buyers that are pushing price up have their stop losses down somewhere in this area. Okay, somewhere in this general area, right? So that's sell orders, that's liquidity. That's liquidity that's also inside of a demand zone where there's unfilled orders. So I like it. But again, I just need to see some more price action. Need more information, guys. You guys hear us say that a lot. Need more information. It's boring, it's cliche, but that's the way trading works. We need information. What we got on? I'm going to look at my chat real quick. Hey, Tiger, long time no see. How is your new job going? Oh, yeah, Jeremy. Yeah, like I was saying at the outset, I just got an offer letter yesterday, and I sent a reply back kind of as a counter offer. So doing a little wheeling and dealing, but it does sound like I have a position. And it sounds like they'll be onboarding me this week too from the sound of the email. So I did a little practice run yesterday, just kind of going through, because basically I'll be doing some financial analyst content creator work where I'll be kind of coming up with topic du jour videos, maybe a few shorts throughout the day, maybe a long form video as well. I don't know how often yet. And we did discuss, I discussed with the vice president of product. That was my last interview. We talked about some ideas. So, it sounds like at some point they do want to have a live stream, like what I'm already doing. So I think that's more on the back burner, for a little bit down in the future. But they're looking at that, which is part of the one thing that excited me about it. And they're also looking at doing interviews with other traders. And they asked if I'd be interested in doing the trading interviews. So I said, yeah, heck yeah, I'll be down for that. I did a couple of those when I was with Ola Prime. Sam, he was off for vacation once or twice, and I kind of covered for him. And whenever a trader would pass their challenge and get their first payout, he's in charge of kind of doing an interview with all those guys and gals. So, like I say, he was off a week or two, and I covered for him, and I did a couple of those interviews myself. And I thought it was nice. I thought it was fun. Just come up with some questions, talk about what they did, how they did it, what advice they would give to other traders going through a challenge account, that kind of thing. But with the interviews with this company, yeah, it'd just be like established traders that have, made a lot of money and all that, and just interview to get those nuggets and put them in videos for the site. So there'll be more information coming out about that. I want to sign on the dotted line first before I really spill the beans on a lot of that stuff. But yeah, good news is got the offer, just doing some wheeling and dealing to, discuss the numbers, and then should be good. So, but anyway, yeah, back to Bitcoin. I think I've said enough about this. Just need more information. And yeah, but yeah, I've got, but again, that's why I've got my alert set here. Okay. For a few different reasons. So, let's go back to a 1 hour. Actually need to put my alert on the line itself. Let's get that. Come on. Trying to get it right on the line. I'm a perfectionist and it drives me freaking batty. Wow, this new mouse is actually quite sensitive. Wow, I might have to tamp down the sensitivity of it. Wow, that is very sensitive. Huh, okay. Anyway, all right, so that's Bitcoin. What else we got, ladies and gents? Well, let's do this. Let's start from the top. I just wanted to take a quick peek at the finance page. Stock futures rise, oil climbs as Iran war rages on. Now, I did read over the weekend where it sounds like Iran is going to be sympathetic to countries that aren't adversaries of Iran, and they're going to be letting the Hormuz traffic continue. Yeah, right here. Oh, wait, no, that's not the article. Never mind. No, well, this one too. Trump is demanding help from other countries. So basically from Iran's adversaries on overseeing the safe passage with the aircraft carriers and things. I think France was one of the big ones that he was talking about. But anyway, he's trying to get some help in there. But I did see another article, and I don't remember where I saw it, where, yeah, it's not here. Basically where they said, yeah, if you're not U.S., if you're not Israel, we'll let you pass safely. Guys, if you don't know this, there is a site called marinetraffic.com. And this is a free site as far as the basics, but you could go on here. Okay, marinetraffic.com. This shows you a real-time interactive view of the traffic in the seas. So here we go. Here's the Strait of Hormuz right here. Sorry, you can see all the tankers clustered up. The red dots, that's the ones that are the oil tankers and such. I do believe that's right. Yeah, crude oil tanker, Virgo. So all these red dots, and you can see they're just clustered over here, just chilling, okay, on both sides of the strait, just like waiting for something to happen. But there's nobody coming through here. Okay, this is where everybody's worried about passing because of the mines and such. One other thing, I'm gonna do. Let's see here. What can I? Trying to think of something here. Let's do this. Actually, I wanted to show you guys something. I just have to do it off screen. Let's see here. I need Discord. I've got a picture I'm going to pull up to show you guys what the traffic path actually looks like. Because the narrowest part of that choke point's about 20 miles across, right? But there's only about a 6 mile period of that the tankers can actually pass through. So here's what I'm going to do. I'm going to take this picture and screenshot it, and we'll just put it over on a chart. Give me just 1 second on this. Okay. All right. Bitcoin. Yeah, let's do this. Let's see if I can make this work. Oh, that's the wrong one. I need to go over here. Hey, there we go. Look at this, guys. Let me zoom into this real quick for you guys. Come down here where there's no lines or anything. Okay, watch this. Let me zoom into this for you. All right. So on the left is January 1st, and then on the right is a few days after the bombs started getting dropped. Okay. But over here, where you see the normal traffic, you see how you got an incoming lane here, and then you've got an outgoing lane here, entering and exiting the strait. That's about a 6-mile width. Okay. And then you got the choke point, which is basically like, from here to here and from here to here. But this is the only travel that they can do. They have to maintain their traffic within that range. Okay. I mean, that's just how they have it set up. So they're not really allowed to start, everybody driving over here or driving closer. You got the shallower banks up close. So that just so happens to be, I guess, the deepest part of, the strait. So they cannot go out of that range on the way in and out. So that's the reality of it. Yeah, it's 20 miles across, but they can only stay within that 6-mile range. So that's where Iran's been putting their mines and bombing the tankers that they have bombed thus far has been basically in this path. So I just thought that was kind of a cool, visual for you guys to see. And then, obviously you look over here on the right and there's just nothing. And this is just, I do believe this is, I think, just the oil tankers themselves. But yeah, if you look at the actual website, again, there's nothing. So this is why oil is going nuts. Okay, now it is roughly 20 or so percent of the world's oil comes through this literally 6-mile stretch of land, of sea, I should say. President Trump doesn't sound too awful worried about it because we do, we handle our own oil. We don't really depend on this region for it. But, at the end of the day, we want to get that open for the rest of the world because it affects our oil markets. Let's go look at oil. Actually, let's do this. I'm going to delete that and put it over here on the oil chart. Yeah, I'm just going to leave this over here so that I can have it for reference for later. But yeah, as far as oil goes, we are we're just bumped into a supply zone on, basically when the market opened yesterday, guys. Yesterday for me here in the States. Okay, for me it opens on Sunday at 4 p.m. usually. 4 p.m. or 5 p.m. my time. But on Friday when we closed, when we closed, we had not yet touched this supply zone. Fast forward to yesterday. Oh, I got the hiccups. We bounced into the supply zone. And because we've done that, it just makes it a little sketchier to be aggressive and try to buy like a demand zone in this area. Okay, because I had this 2-hour zone drawn up right here. This candle right here, guys, on oil. Because it's kind of giving us a little bit of a channel, right? Are we not getting a little bit of an upwards channel? If we look at the highs and the lows, it's kind of giving us that channel. Well, that was okay to follow up until we bounced into this zone over here. Okay, it's not a, again, it's a I do believe 1-hour zone. So we're keeping an eye on what's happening now that it's bouncing into this candle, this supply zone. Let's get our volume up. This is why, because look at our volume spread analysis candles all the way at the bottom. See that? Yellow big candles. That tells me we had a lot of activity. I mean, that's a lot of institutional type activity that happened during this time. And from this candle, we had a gap down because you can see this candle wick here. Okay, we had a gap in between, right? and we broke through what was a little bit of a 4-hour demand zone. If I go back to a 4-hour timeline real quick, talking about this candle right here, okay, from March the 6th. That was a Friday. That was the first week of the war. And then we had the Friday close, and then on Sunday, a Sunday 8 days ago, that's when we had that big ugly gap up and big continuation. So what happened? Price started turning the other way. Yeah, you have people taking profits. You had some other decent news that came out where the markets liked it. Okay. And then price came down and broke through it closed the gap, but then it pushed through the demand zone. Okay. It's a puny candle, but it still is a demand zone candle. So that's the supply. That's what the supply zone chewed through. That's what this 1-hour supply zone chewed through. Okay. This is that 4-hour candle we just looked at, the gap. So that tells me that we've got to have some type of strength in this movement right here. So because we had that strength in this movement here, that's why I'm not too excited about buying these higher up demand zones, because we have bounced into that supply zone. So it's a lot of angles. It's a lot of backwards looking, forwards looking, just to come at the conclusion of saying, hey, I don't really know if I want to test out this zone right here. Because then I'd have to also look at what? I'd have to look at my curve analysis, swing low to swing high. And that's basically flirting with the top third. So part of it's in the top third, the bulk of it's in the middle third, but regardless, it's still in the chop zone, okay, at best, or in the premium zone at worst. So I don't know that I want to be trying to buy this area when I just went through the supply zone that's bouncing through and high on the curve. It's too expensive. It's a little sketchy, right? So yes, I did draw them up. Yes, I did draw up these alerts for this demand zone, but I do it a lot, guys. I do it a lot because I still want to see what happens, if and when price comes down into the demand zone. Do we get a candle close bullish after it bounces in and collects these? Because there's still unfilled orders in here. That's the reality. And our base and candle had a, above average yellow volume candle for the base, for the consolidation. So, and it was just there for a short while. Talking about this candle, right? So I don't want to ignore it, but I also just listed off a ton of red flags, at the same time. So probably just going to ignore it. But yeah, once we get price bounce in, I do want to see what happens. I want to see if we've reached the 200 EMA on a 1 hour, on a 30-minute, 1 hour, 15-minute. I mean, it's going to have to, it's obviously going to have to come down to pierce the 200 on a 15-minute, but I don't know, guys. I would prefer it to be the 1 hour time frame where the 200, where the 200 comes through. That's just my preference on this thing. We'd have to get 200 to come up like this, right? And then pull our zone forward. So it might take some time, but yeah, I'm probably just going to skip it. There's a few too many odds enhancers going against me, as far as I'm concerned, with the way I look at it. I don't know if you guys have any other thoughts. Let me know. Let me check the chat real quick. Raging Fire, man, this war is affecting our country big time. Prices of everything went up rapidly. Hope this war comes to an end. Yeah, man. President Trump makes it sound like, as soon as we get everything under control, prices of oil will come down. It's funny. I went yesterday. So I got a new car back in December. And part of my deal, because I'm a sales guy at heart, I come from a sales background. So part of my negotiating, number one, I got a steal of a deal. They tried to offer me $768 a month for leasing. And I wheeled and dealed them down to $599 a month. And 2 free tanks of gas. That was part of the deal that I got sweetened in there. And so I just finally, for the first time yesterday, finished that first tank of gas. And here it is, March. So that's 3 months on 1 tank of gas. What do you guys think? Does that tell you I need a life? I need to get out more? Yeah, GU's in it. Yeah, we'll take a look at that here in just a second. So anyway, I still have to go to the dealership so they can give me my second tank of gas. But I got down a little low and it's a little further away. So yeah, anyway, just the whole reason I brought that up is because yesterday was the first day I had to, it was the first time I bought gas since like early December. And yeah, I noticed that the prices were up way higher. So yeah, I know I agree. But we just got to have faith in the system, guys. I mean, as long as we get our supply back in order. See, we're in a supply shock right now with oil. Obviously, the war, mines in the Hormuz Strait, but the bulk of that is world oil. Because again, we here in the States have our own oil. I mean, we've got, I mean, I don't know. I do think we take some percentage, I think, out of the strait. I'm not sure, but we get the bulk of our oil from ourselves. And Venezuela, obviously, right, with the new with the new setup we got with them, new relationship with the vice president there. President Trump sounds happy with her, which is kind of surprising, but you know, interesting at the same time. But no, we should be good with our oil. He says that as soon as we get this war closed, oil prices will come down, and I believe him, guys. I read a couple of President Trump's books way before he came down the golden escalators, before he even thought about running for president. So I got faith in him based off of what I read and the history of what he's done so far. So, so yeah, just keep the faith. But yeah, it's definitely a racket. Nobody likes war. It's stupid. But at the end of the day, when you got somebody chanting "Death to America" at you all the time, you got to do something about it before they strengthen up again. So I don't know. It's a hot topic. Or, there's arguments either way. I don't like to get into them, but I also don't like our country being threatened. Nobody likes that. So, but yeah, I think it'll come down at some point. You could have hold and sell your gas tank. Yeah. Yeah. Well, that's the thing, guys. I work, me going through my period of unemployment since January 8th. That was my last day with Ola Prime. If I'm good at I'm good at a lot of things, but I'm really good at hoarding my money. So I didn't want to spend any money while I was, until I got this position. So I just stayed at home, studied my ass off when it comes to trading and how can I make my streams better, my shorts videos better, and not to mention all the applications I put in. So anyway, yeah, I'm rambling at this point, but yeah, it's just funny that was my first time in 3.5 months of putting gas in. And I just put in a little bit because I want the free tank, right? So probably today or tomorrow, I'm going to drive all the way over there and get my full tank. But anyway, yeah, let's look at a couple things. You asked about pound dollar. Yeah, that's another one I want to look at getting in. Dollar yen too. I think we're getting close over there. Dollar yen, pound dollar. These are a couple really good looking assets. Okay, here's pound dollar. Now we do have a 4-hour supply, a little higher up, 1.333 area. Got a couple basing candles here. I don't know that I'm okay with the volume on the leg out candle because it is growing at least. These candles down here. But it's not as strong as I like to see. Let's go down to a 1 hour. Okay, on a 1 hour time frame. So here's what I do like about it. It looks a little better on a 1 hour time frame. So obviously we've got our, and we'll get to this one down here in a second. But as far as the main one I'm looking at, it's up here. We do have a 1 hour demand, supply right there. That little tiny little candle. It's inside of our 4 hours. So there's my 4 hour, 1 hour confluence. Okay, that's step number one. Regardless of the time frames I'm looking at, I want to make sure I've got at least 2 or more sets of eyeballs on it. So we already know we got a 4 hour set of eyes. Now I know we got a 1 hour trader set of eyes, right? And then obviously up here, that white line is a 2 hour. So there's where our 2 hour supply zone is. All this is within the context of the 4 hour candle. So as far as getting into this trade, I like getting in right at the proximal line of the overall zones. Okay, the 4 hour. The 4 hour is basically the same thing as the 1 hour. The volume starts growing. We start getting into the yellow candles, really starting on this candle here. So a lot of strong volume coming in to the markets, pushed prices down now. And not only that, but by the time price retraces, we'll be bouncing into the 200 EMA. So in this, I need to see the opposite. I need the 50 to be under the 200, right? 50 is the fastest one among the two. So when price comes up into the zone, yeah, I need to see it pierce the 200, which of course will start turning around by then. Okay, and then just imagine our 200 EMA. It's going to start coming in like that, right? I need to see it pierce the 200. And the last step, once we get up here, which I don't think will be a problem at all, is I need my volume. I need my RSI down here. I need it to pierce the 80 line. That's going to be no problem because as you can see, it's already at 75, right? Already at 75. So that's not going to be a problem at all. Now, what about this bottom zone down here? Why am I ignoring it? Well, it's kind of like one of the previous assets we just looked at. It's just a little too low on the curve. A lot too low on the curve. I mean, let's be real. Look at this. Okay, if we have to look at swing high, which is going to be clear up here, right? We're nowhere close, and that's if we utilize the highest time frame. If we got a little closer to home, going down to like a 15, a 30, we could maybe look at the swing high up here. Swing high, swing low, swing high. And see, that would still put us in the middle down here. So it's just too low on the curve. And as you can see, we're chewing through it. And the biggest thing is we bounced into the big underneath demand zone. So when we did that, the minute we bounced down here into this daily 4-hour confluence, okay, from way back here, the minute we bounced in and touched both of those zones, that negated this. That negated the lower zone. That negates this. Because I think that a daily and a 4-hour confluence of eyeballs, the higher time frame, okay, remember, banks trade on some of those higher time frames, daily 4-hour. That's going to be way stronger than any zones in this area. This turned out to be a 4-hour supply. I only drew in the 1-hour candle, but this is a 4-hour, 1-hour. Okay, that's not near as strong as a daily 4-hour. So as you can see, we're pushing through it like a hot knife through butter, right? Oh wait, no, that's actually a 1-hour 15. Is that right? 1-hour 10, 1-hour 5. 10 minutes. Yeah, here we go. So this is the only reason I drew this zone up, guys. Here's our 10-minute supply. Okay. That's a very bearish candle and it pushed price down. But again, it's just not going to be near as strong. So I'm ignoring it. The only chance would have been if I saw something really strong, a bearish engulfing candle with a lot of volume spread analysis. But as you can see, we didn't get that. We just had average volume as we entered the zone. So that just tells me to ignore the trade. Because I didn't get a bearish engulfing. I didn't get a bearish candle. And we've pushed through it. So, yeah, stayed safe, guys. Next step, look for a higher supply. And that's why I've got my alert set right there on that 4-hour, 1-hour confluence. But also knowing I have a 2-hour in the middle of the zone. So basically, if I get in that trade up there with the red, if price follows this basic price action, yeah, we get a 1-hour bearish candle close after we enter the zone. Stop loss somewhere up in this area. We'd basically, figure out our 2-to-1. And that's the other thing. Is it even going to pay? So let's just say we got in on the on the proximal line of the zone itself. Okay, the goal would be to go down to the next demand or swing low, which call it however you want. We'll just call it right here. Okay, that's 105 pips. 105 divided by 2 is 50, 52 and a half to be exact. So yeah, that puts us right about there. That would be our 2-to-1. But I still think that even that might be a little too. Yeah, see, because now we're introducing this current demand zone that's forming on a 1-hour. Let's go to a 4-hour real quick. Yeah. Now it's premature to draw this up, but this candle right here could potentially be the start of a demand zone. So I wouldn't be able to put my take profit down here. I'd have to move it up here because I think that this could, if we get price just push up into that demand of that supply, well, this might leave us a gap. This might be where I would have to take my profit. See, the original take profit would have been down here, right? But if this turns into a demand zone, then I'd have to take my take profit up here. And now we're only talking 1-to-1 profit, if that. So, probably going to just ignore that as well. But pound dollar is our strongest, our most bearish currency. Okay, -9. And yeah, -9. So it is the strongest, but I just don't like the price action because also I have to look at this over here. See all this choppiness right here? That's retail chop. And where's my supply zone I'm looking at? It's inside of that retail chop. So yes, it is a supply zone. I just don't think it's much of an institutional supply zone. I think it's a lot of this is more so a retail type chop zone, retail type supply zone. And up here, where the the origin of the strong move down is, I don't know. I don't know that I like really any of that as a zone. This was a supply zone, but we've already pierced it, so I can't use that. There's just no gaps. There's no strong gaps. So I really can't use that. I think ultimately the best thing for pound dollar, as far as what would, make me a little happier about trying to get into a trade, what would make me the happiest is if we base somewhere in this area now. Let's say we come up here and we just base sideways for a little bit, and then we form a new down move and we break the rest of this demand and close down here. That would make it a little more appealing to get a retracement back to this consolidation. And I'll draw this a different color for a possible sell from here. That would make it a little more appealing because then this would be a new supply zone, right? That would be a new supply zone. Talking about this basing action. This basing action here, and then we just get a retracement to it. That would be more appealing to me. So guess what I'm going to say? I need more information because I don't like anything about that current structure on the pound dollar. I will see what happens when price comes up to here, because at the end of the day, it is kind of there's kind of a little bit of former support back here. Could that former support become resistance right through there? Yeah, possible. That's part of the reason. Yeah, talking about this candle right here. This swing low. And I always draw these up with a blue dash line. But that's going through the supply zone, right? This swing low. And then the same thing over here. We got swing low action. So it is going through that supply zone. Talking about right here. So yeah, that's part of the reason I'm even keeping an eye on it to begin with. If it weren't for that former support potentially becoming resistance, I probably would ignore this altogether. But the good news is it exists. It goes through the supply zone. I've got a 4-hour, 2-hour, and 1-hour confluence. And my 200 EMA is going to be going through that zone about the same time. So that's part of the reason I'm still interested in it. But ultimately, my favorite move, like I said, is if we were to get some type of consolidation, a brand new supply zone form, and then maybe get a retracement to that. So that yellow line is my favorite. The red line is my second favorite. If that makes sense. What else we got? Don't catch fake outs. That's right. Yep. And it's easier said than done, right? It is easier said than done. But, at some point, you guys stick with this stuff long enough, you will find where you get into far fewer trades than you did when you first started. That's inevitable. That's inevitable. I used to get into so many trades, and it was just crazy. But now it's a fraction of what I used to get into. Excuse me. Do you guys have anything? Any other potential assets you want to have a look at? Obviously, I did have a couple alerts that have hit. Oh yeah, oh shoot. Yeah, I need to take a look at a couple of these. Okay, so had Kiwi. So Kiwi dollar, as you can see, it hit basically the same zone as the pound dollar we just looked at and chewed right through it, right? Same thing. It just it's a little lower on the curve. Swing high, swing low. Remember, this is basically sharing the top end of the bottom third and the bottom of the middle. So it's just too low on the curve. And as you can see, what did it do? Chewed right through the zone. I never got my bearish candle showing that it was trying to change momentum. It just stayed green. So as long as I see candles that stay green, I just simply avoid the zone, and it kept me safe. Now I did draw up a tiny little guy right here. This is too narrow, but I did want to see what happened if we bounced into it, which is basically what we're doing now. Okay, so we know we're through this zone, so I can color that light red, just showing it doesn't exist anymore. I usually just kind of hang on to these for a while to see what happens, like in the price action thereafter. But yeah, we are bouncing in. Look, I mean, here's the thing. We're bouncing into this really tiny looking supply zone over here, 15-minute chart. Okay. It's a fat doji. Okay. I'd call it a doji, but a real fat doji. But we didn't really have a ton of volume coming out of it. Right? There's nothing exciting about the volume. This is volume from Thursday's Asian session. And yes, obviously the Kiwi is a popular Asian session currency to trade, but we just didn't really get it. Yeah, we got some yellow candles, but this is, it's just much lower volume than I like to see. I want to see those candles a little bigger. If those candles would have been a little bigger, then that would have made sense. But here, yeah, 1 hour chart again, latter part of the Asia session from Thursday, and it's just on a 1 hour time frame. This doesn't look good at all. So yeah, just I ended up drawing up this zone. Think about it. I drew this zone up when price action was still over here. So none of this to the right had existed yet. Okay. That's why I drew up the supply. Was back when price was in this area. See, at the time, if price would have bounced in, I might have been a little bit interested in looking for a short. But the reality is the range of the zone, think about this, guys. The range of this zone was only like, what, 2 or 3 pips wide? 2.3 pips. Yeah, see, that's just too narrow. That's way too narrow. I think my minimum that I want to see on any asset is at least 5 pips, and that's cutting it. So this is half of that. But you just never know. It very well still could potentially win out, but I'm not going to be around to find out. I'm not going to be around to find out. That's just too small, guys. That's ultimately too much noise. So what about the area right above? I mean, this could potentially, catch price and push down. We have a former support potentially becoming resistance. But again, the volume, it's during the latter part of Asia session, and it's just not a lot of volume. And not only that, but on a 1 hour chart, our RSI did not reach 80. And we haven't even gotten anywhere close to the 200. I'm sorry. I was looking at the 2 hour chart. Okay. So on the 1 hour chart, we're over 80. Okay. But we still have not reached the 200. So yeah, it's going to have to be forced to chew through the supply. Maybe actually, let's do this. Let's go back to that. 2 hour. Yeah. What about a 4 hour? Okay. So here's the thing. This could potentially become a 4 hour, but again, it's low on the curve. Just not interested. I'm going to go ahead and draw it up just for kicks, because this basically is a 4-hour supply, right? We got a gap. It left us a gap. Gap from here to here. There's our fair value gap, right? So there's our fair value gap right now, and that's what we're trying to close. But I don't like the volume. I don't like the volume. I don't like how low on the curve it is. It's just too many variables going against it. So I've got variables for it. Former support, potentially become resistance. I've got a 4-hour supply zone with a decently strong fair value gap down. I also like that price came down, but did not touch this demand zones down here. So in other words, it didn't have the strength from those zones to push price through any of these zones, these smaller zones. I like that. But again, I just didn't get a whole lot of volume on that gap out. We have a blue candle, for crying out loud. Yeah, I basically never take trades on supply zones that have blue candles on the volume spread analysis. That's below average volume. If that's below average volume creating a decently strong looking zone, then there's no institutions placing those trades. That's just retail traders. That's just regular, Jack and Jill traders at home on their computers and their smartphones. Because price did win out on the bear side here after this consolidation. I mean, think about it. That actually consolidated for quite a while sideways, right? A few, good handful of hours. Ultimately, price broke the structure to the downside, and that's where the breakout traders won. Okay, the breakout traders won to the downside. But do you see a bank trade in here? Do you see a hedge fund placing, $1 million orders, $500,000 orders? I don't see that. I just see regular, average, boring retail trader volume. These are the candles I want to see when price leaves a consolidation. I want to see big yellow candles, big red candles, okay, like we had back here. Ooh, that's really nice, actually. See, watch this. Down over here, you got a downtrend, and then all of a sudden, you got the institutions stepping in. And we know that because of how much volume was traded. And it's like bouncing it's a rubber ball bouncing off of a concrete floor. Price comes down, smacks the floor where the banks are waiting. You see they stick in all their orders and push price up. Right? That's what I want to see when a zone is created and leaving the zone. Really one or the other, but preferably the leg out candle. If this volume, because like right there, you guys see we got a very strong bullish candle, right? Price dropped all the way down to the bottom of the range of this candle before the institutional volume slammed it back to the top. See, that's the basing candle. But just as important to me, the leg out candle had the strong volume as well. That's what I like to see. And then what happened? Price actually returned to the demand zone, right? Because that turns this into a demand zone. What happened? Well, price came down and wicked into that demand zone. And what happened? It collected unfilled orders and pushed off. So that's the volume I want to see. And when it comes to where we're looking over here on the right, we're just not getting that volume. We're not getting that volume in here. Boring candles, boring VSA candles. Okay. So probably going to ignore that. Just look, yeah, and this is all pretty efficient price action. Okay, there's no gaps up here on a 4-hour chart. If there's no gaps, that means there's no inefficiency. If there's no inefficiency, then that means the banks probably aren't going to be interested in trading in this area because the banks like inefficiencies. Here's an inefficiency up here on a smaller time frame, but that's further up. See that candle right there? We got a gap underneath it. That's a little more like it. Gap here. Okay, there's our fair value gap. There's our supply. And price dropped through this low, so it broke a structure. The volume could have been better. Yeah, I don't know. I don't even know about that area, guys, to be honest. So that's Kiwi dollar. I'd rather get into a pound dollar more than anything because if you guys remember, that is our weakest currency is the pound. Let's go take a look at the surprise index. Pound dollar, or I should just say pound. So the British pound has only exceeded expectations on 1 out of 5 reports. That's not great. That's not great at all. If we take a look at the British pound, they've exceeded expectations on 1 report. That was the retail sales. It was a very strong report. I'll give them that. Okay, the previous number 0.4, they forecasted it to go down, but it actually went up 1.8. So that's actually very strong for the retail sales. But that was it. A couple neutrals and then 4 bearish. So that's overall not good. So that's the number one currency I want to be selling this week, just like the last basically couple weeks. Sell the pound, buy Aussie. I mean, it's like a repeat of the last 2 weeks. Aussie continues to be the strongest currency. And the euro and the dollar are right behind. The dollar actually gained some decent strength over the last week. A little bit. I think that, let's see. Yeah, 63. Okay. So, yeah, I mean, the top 3 right there, guys. Aussie, euro, US dollar. Top sells, British pound, Swiss franc. I mean, the Swiss franc, that's been number 2 for the last 2 or 3 weeks as well. So just going over here to the top setups, I love Aussie Swiss because Aussie is the strongest currency. The Swiss is the second weakest fundamentally. Remember, fundamentals, we talk about that trifecta trio of analysis. Fundamentals is the strongest leg. Remember, that's what CNBC is talking about. All the bankers, the institution workers, the CEOs, the CFOs, they're talking about the financials. They're talking about the fundamentals, fundamental analysis. So fundamentally, I love Aussie Swiss. Aussie Kiwi, it's not as good. I mean, the Kiwi itself, it is weak, but it's just not as weak as like the Swiss. So yeah, I'm okay with that. Okay. I'm okay with selling the CAD, selling the Kiwi. So Aussie Swiss, yes. Aussie Kiwi, yes. Dollar yen. What did we have on the yen? Because we know the dollar is strong. The yen's 50%. So the yen is it's neither strong nor weak. And remember, the yen actually got just a little bit stronger in the last week. Let's go look at the yen real quick individually. Okay, last 7 calendar days, that's these yellow fonts over here. So GDP report came out bullish. We had bearish PPI and household spending. So yeah, still net short, net bearish. But it's 50%. It's not a very strong sell. It's just not. Remember, for me, 40 or below, that's a good eye-opening. Hey, I want to go sell that currency. 60 above is, hey, I want to absolutely go buy this currency. So CAD and Kiwi, they're just over 40. So obviously they're closer to, hey, I want to sell this than buy, but it's not as weak as I would like to see it. So even though we've got Aussie, New Zealand, Aussie CAD on the list, I'm just not as interested as I am Aussie Swiss or pound Aussie shorts. So let's go look at pound Aussie because I know that's up there. Yeah, pound Aussie -8, very weak. Let's go look at it. So pound Aussie. Now on pound Aussie, if we just take a look at the very bottom, we have bounced. Ow, just smashed my leg. Oh, that hurt. Okay, on pound Aussie, we've bounced into this demand zone confluence down here. So automatically, even though it's the weakest, well, one of the weakest, weakest pairs, I got to be aware of this. So we're looking at a daily demand inside of a weekly demand. I'm going to go up to a weekly chart, guys. And let's turn off my sessions just for a second. Okay, that's a strong, that is a nice and strong weekly demand zone, guys. Let's go look at this. Remember, trading's all about looking into the past, see what happened in the past. So in the past, we had an indecision candle on a weekly time frame, right? That's like a fat doji candle, isn't it? And then we had our gap, fair value gap, acceleration gap, runaway gap. I call them acceleration gaps. I don't like, I just never did like fair value gap. I think too many people look at fair value gaps the wrong way. So yeah, they're synonymous. I call them acceleration gaps, but there's our gap. So that gap is showing us that we have a strong base, and a strong base that pushed price up for a handful of weeks in a row. Broke structure here before bouncing into what? What did we bounce into on a weekly time frame? Bounced into this supply zone. What did that supply zone do? It pushed price back down. Okay. All from this weekly supply zone. But what I do like is that we did break this structure. Right? We broke these structures, didn't we? Talking about these wicks. And obviously, if we drop down to a daily, if we drop down to a 4-hour, then we're obviously going to have closes up here. So because we broke this structure, that tells me that this is a decently strong weekly demand zone. And now we go back to where we're currently at. And we have bounced in. If I go all the way down to a 4-hour, we've bounced into the weekly. But what about the daily? Have we touched the daily? Oh, we haven't touched the daily yet. Okay. We've come close, but we didn't touch it yet. I like that. So because we have touched the weekly, but I'm okay with placing a trade potentially right here in the supply zone I drew up on a 4-hour chart. I'm okay with that because we did not yet touch the daily. The daily is like the big action time frame that the banks like to use, the institutions, right? So because we failed to touch it, that leaves this as still a possibility for a short. Let's look at this for a second because this is important. That's probably going to be close to a 61.8, is it not? Let's go have a look. Swing high, swing low. Okay, not quite. Oh, actually a little deeper up. Never mind. So we're a little deeper up. For the fib traders out there, what about our curve analysis? Swing high, swing low, back to swing high. Ah, look at this. Look at this. We got a supply zone in the top third. So that supply zone is in our premium zone. What do we do in premium zones? We sell. So me gusta. I like it. I like it a lot. And I've already got my alert set, as you can see there. So we're looking at a 4-hour zone. Hell, even if you look at this as your leg in, then you're still only looking at 1, 2, 3 basing candles. So that fits on my time limit. Okay. It didn't spend a ton of time there before dropping away. And we have a gap. Now the gap looks a little funky on a 4-hour, but we still have a gap from there to there. Okay. In fact, I could even look at this as a daily supply as well. Gas like this. So that's also a daily supply. And that daily supply also leaves me a gap. So there we go. We got a daily 4-hour supply zone confluence, guys. I like it. High on the curve. Now the only thing I'm waiting on, actually, what's 1 hour give me? Okay, so one thing I would have to do is by the time price comes up to the supply, let's just draw it in real quick for you. Okay, if price comes up to the supply, by the time it does that, here's the one downfall. The 50, which I need to stay under the 200, it's actually going to probably go and cross. So basically, we'd be getting something like this. Oops. Right? We would probably see a cross in there on a 1 hour. Well, what if I look at it on a 4-hour chart instead of the 1 hour? Is that okay? Well, yeah. It's again, the higher the time frame, the more accurate things tend to be. So on a 4-hour chart, my 200 remains above the 50. The 50 remains below the 200. So yeah, I'd probably still take a hack at this. And then we go down to the 1 hour. Hey, does the 1 hour, by the time price comes up, do we get RSI crossing 80? So that's going to be the other piece. That's important. So yeah, I'll have to resort to the 4 hour where I got my 50 staying below my 200. So I like it. I got another, there's another confluence much higher up. But remember, pound Aussie is the weakest, or almost the weakest. Excuse me. So because it's that weak, that affords me a little bit of an opportunity to be a little aggressive. Because again, my normal 1 hour chart where I look at my 50, 200, yeah, it's going to cross. But we got a lot of drop from that demand, from that supply zone. So yeah, I'm going to stick with it on the pound Aussie. I'm going to stick with my yellow bar here. When price bounces in, I do need to see that bearish bar probably on a 1 hour. I would really like to see a yellow candle, or at least some volume higher average, or higher than the more recent candles. That's really it. So yeah, that's going to remain. That's going to remain probably one of my favorites, because there's no denying this. This resistance up here. No denying it. So easy to use that as our curve analysis starting point. Swing high, swing low. We'd be selling in the premium zone, guys, and that's all we can ask for. So I like it. But it's still a ways away. We're talking 100 pips away. I mean, pound Aussie itself, how many pips does that move? That moves 160 pips a day. So that's nothing, guys. This is one of the fastest moving currency pairs. This is our Lamborghini. This is our Porsche, or whatever fast car you like. Okay, that's what pound Aussie is. It just moves a lot of pips. Very fast. Probably not the most beginner-friendly currency pair because it does move so fast. That you want to, you just got to be careful with it. But I like it because, well, I like the pips. I like the fast. So you don't want to get in the fast when you're first starting, but once you've been around them long enough, you learn their characteristics. You learn what makes them tick. It starts to get a little more, a little easier, a little better, a little simpler, I should say. We never use the E word. Nothing's easy about trading. Let's see here. So yeah, that's probably about all on that one. Let's go look at our dollar yen, because we did have that alert hit. Okay. And that was a dinky little 5-minute zone, by the way. So we had that dinky 5-minute zone and just chewed through it. Okay. Didn't get any strong bullish candles with volume spikes. That one right there might have been close, but it just was a tiny candle. I needed to see a better candle. I needed to see more volume, and I didn't get that. So I just chewed right through it. So there we go. Stayed safe on dollar yen. I can delete that. Next stop on dollar yen's a little lower down on this 1 hour. Our 200 is still quite a ways below the zone, so it may not be a great spot. But we'll go ahead and set an alert there anyway. See what happens if and when price comes down and touches that area. We'll throw that out through Friday, 1600, which is when the market closes here in the States, 1600 my time. It's 4 p.m. So yeah, we'll keep an eye on that. I mean, this demand right here created a gap, created about 4 green candles in a row, ultimately broke this structure and closed above this structure, and then even continued a little further. So I like this demand zone. The only thing going against this demand zone is the fact that it created as a result of bouncing into another demand zone. So that's a little bit of a red flag. I prefer, it's not a game killer, but it is a little bit of a -1 when price when a zone forms as a result of bouncing into a former zone. And that's what we got on that 1-hour chart. Although I got to say, it's not the best looking demand at all because this candle, it didn't even come down. We had a wick actually take all this out. Now that I think about it, okay. So yeah, this draws it up as a demand zone, but think of it. Look at that tiny puny gap. Number one. Number two, yeah, the body of this candle or wick didn't even come down to this one. When you get price consolidate and then you have price go into that leg out candle and it goes that far below the previous candle, well, that's basically a liquidity sweep. So if we've already swept liquidity there, then I'm not that excited about it. So I say all that to say, yeah, that demand zone that I'm looking at bounced into here, but I think all the liquidity was swept. So I'm still going to stay interested in this area. And one other thing I like about this demand is the fact that we had some yellow candles, okay, on the way out. Yellow candles on the volume spread analysis, starting on this candle right here. And even the leg out candle had volume that was greater than the basing volume, right? So I like that. I like this overall look. Dollar yen is giving us a +8. So it's our third strongest currency pair. And we're not too far. So yeah, that's going to be my closest alert that I'm excited about. It's only about 20 pips away. Okay. Yeah, pound dollar, euro dollar. So yeah, when it comes to those two, yeah, we went over the pound dollar already. It's yeah, I need to delete this because I was using it. Oh well, actually, if you weren't here earlier, yeah, what I'm looking at on pound dollar is I would like to see price base somewhere in this area, which is the yellow line, and then drop. I would really like to see that because I want to see this demand zone taken out. I want to see this happen. If this happens, then I'd be interested in a sell at that point. But until then, the only other option we have is this zone here. And we've already bounced into this demand. So I feel like this daily 4-hour demand zone confluence is probably going to be strong enough to push price through this 4-hour supply because we didn't really get a daily. Yeah, we didn't get a daily confluence. And all this is efficient price structure up here. Now, what about euro dollar that you asked about? Well, if I have my choice just from a currency strength, a currency weakness point of view, I would prefer the pound dollar because the euro is strong. So do I really want to sell the euro? Now, obviously, it makes sense to buy Aussie strength, but the euro is the second strongest. So I don't know that I want to really be going against the strongest currency. Yes, I'm buying the strong Aussie, but I'm also selling the second strongest currency. And I just don't like that. That's why I personally prefer selling the pound dollar or pound dollar, pound Aussie versus the euro Aussie, euro dollar. Sell euro? Nah, no thanks. The dollar, it makes sense because it's one of the stronger ones. But despite that, let's just have a look at the technicals. And the technicals really look very similar to the euro dollar. Okay, we bounced into the demand zone confluence already on the euro dollar, the pound dollar. Euro dollar, same thing. We've bounced into an underneath demand zone. So basically on this, probably need a return to a higher price point. This is drawing up as a 4-hour supply, but there's no volume here. So I'm not excited about this area at all. If you get a return to price, there, I drew up a supply zone, but it's also the result of bouncing into a former supply. So that's automatically a little bit of a negative. You know, if I look at it on that time frame. Now, if I go to the smaller time frames, then it might look a little different. Okay. So this would be a 1-hour supply, price pushed down. I think it's going to look better on a smaller time frame, actually. 30 minutes, 15. Let's see what a 15 looks like. Ew, it don't look good at all. I do like all the volume that took place. The VSA candles down here. See the red candles, the yellow candles? That is from all this area, but yeah, it just looks ugly. Gosh, it looks ugly, but yeah, at the same point, I don't want to be selling the second strongest currency. I just don't. This, if the euro was a weak currency, then where we're at currently would look great because we're bouncing into a really nice looking supply zone. But the problem is we've already hit that higher time frame demand, and I'm not interested in it. See, I like everything about this supply as a potential supply, except for the fact that we have bounced into the demand zone underneath. This demand zone is a higher time frame. This demand zone is I do believe, a 4-hour, I think. Let's go look. Oh, wow, we're way back here. Oh, that's a smaller. Okay, so that is a smaller time frame. What the hell time frame did I draw that up in? Let's go look at it. Now it's in the past, but you can't forget about the past. I guess it was a 2-hour. Sorry, I forgot what time frame I drew this up on. Let's go look at this real quick. Okay, 2 hours. Yeah. So I drew up a 2-hour demand. Talking about this candle. So think about this candle for a second. Look at the volume. The volume on the leg out and then the candle after. See all the VSA candle growth? That tells me that this is a very, very strong area. Look how far away it pushed price. Broke some structures, closed, kept going, breaking more structures. So that's where we're at right there. And if I go back to current price, oops. See, that's where we're bouncing. So because we're bouncing here, I'd have no interest in shorting this supply. Zero. That's just too sketchy. And we're talking about a demand zone from August, guys, August 1st of last year. Most people don't think about going back in time and looking at these zones, but you have to. Because if you try to short right there, chances are that zone, that higher time frame is going to, push right through you. So anyway, I do have like 8 minutes left, guys. We'll take a look at this alert that I just had hit. And just so you know, the schedule, let's get you the A1 schedule today. I do believe I have the last segment. A1 live stream. Okay, A1.com, A1trading.com, guys. You can go to the live stream, A1 live stream button up here, and you'll see our schedule for the week. And then you could just link. This will play the live stream right here. You can just click on it from here. It just sends you to YouTube. If you guys, most of you guys know this, but just in case there's anybody new on. Okay, and I'll be on at the last segment of the day. 10. Now these times are in Eastern Standard Time, so it's an hour ahead of my time. But yeah, 9:45 my time, but 10:45 New York City time. So anyway, my nose is itching like crazy. Sorry, guys. So anyway, I wanted to point that out. But yeah, we'll finish it up on oil because I just had an alert hit. Oh, good grief. So yeah, just to finish my thoughts on pound dollar, euro dollar, Muture Kelvin. I just don't. Oh, you said 30 minutes. Yeah. See, I don't like either one of them. I really don't, because we're bouncing into those demand zones underneath. Those daily and 4-hour demand zone confluences are going to be much stronger than a 30-minute. So I personally would stay away from it. I would be careful if I were you. I really would. Just got to be careful with them. Got to be careful. Yeah, euro dollar, pound dollar. Yeah, just be careful with them, man. These zones are going to be strong, most likely stronger than that. All right, let's look at oil to finish out the stream. And Prizrak is buying oil. Okay. Well, I like it. I like the fact that we were +5. So yes, we are bullish from the fundamental sentiment perspective. It could be better. I like, you guys know me, I like 7s, 8s, 9s, and higher. But a +5 is a bullish signal. not to mention the chaos that's going on. I think partly why the oil is dropping is because, again, Iran did say that he is going to allow passage through the Hormuz Strait for their adversaries. Okay. So the U.S. here, we're shit out of luck. But when we're talking some of the other countries that are kind of staying away from the war, they're good, right? China, some of those other countries that are, that are in cahoots, I guess you could say, with Iran, diplomatically, politically, whatever. So because of that, that's a little bit more positive news for oil, you would think, or not positive, but I mean a little bit more of a bearish reason. So it's a little less supply shock is what I'm trying to say. If we have supply shock, prices rise. If we have a little less supply shock, then I think that's probably partly why we're getting this decline. But the cool thing is we can look for a demand zone to possibly buy into, and that's where we're at, because we are still getting the overall bullish signal. We still have the reality of the war going on. And whenever the U.S. bombed, Karg Island the other night, okay, that's their crown jewel where they have most of their oil. They did not touch the oil facility. They only touched the military and, the businesses and things around the oil. So they did. The military did stay away from bombing that as of now. Now that could change. But as of now, the oil facilities are just fine in Karg Island. And guys, remember, when we're talking Karg Island over in Iran, oh, gosh dang it. I'm not trying to. When we're talking Karg Island over here in Iran, if we go look through the strait, okay, here's our Strait of Hormuz. We're talking about this little island right here. That's Karg Island. This is where Iran has their oil facilities, those big oil drums that you see right there. So this is where the U.S. came in and just wiped a lot of this off the map the other day. I mean, but they spared the oil so far. So anyway, let's go take a look. So now that we are kind of flirting with this demand zone, now did we touch it or did it just hit my alert? Okay, so we did pierce through. So we have wicked into the demand. Yeah, and see, here's the challenge though, because we did also bounce into a 1 hour supply. So I don't know. I'm a little sketched out by it. I do like that this is a 2 hour demand and this is only a 1 hour demand. So that tells me this might be a little stronger. But I dislike that this supply zone has more volume than the demand zone I'm trying to buy off of. See the big yellow candles all the way at the bottom? See those candle sizes? Those are bigger than the candles at the bottom of the demand zone here. Talk about these candles. So because of that, that tells me there's less volume being traded here than the volume that was traded over here. So I'm thinking that this is probably going to be stronger. So I'm probably going to ignore oil, me personally. Oh yeah, momentum. Yeah, well, as far as momentum, Prizrak, yeah, I like it because we're kind of getting, a little channel, right? We're kind of getting a little bit of channel play, right? Yeah, that's easy to understand. You got a channel, and obviously there's a couple ways of drawing up the channel, but yeah, the point is price is getting consistent higher highs and higher lows. But I do like also, just to finish the thought out, if we looked at these extreme lows, like this low here, think about this also. There's going to be traders seeing that price has broken down below. So think about this. Swing low. Actually, I'm just going to do this. So let's just picture just this swing low and this swing low. Well, price is breaking through that. So now what's happening as we speak? There's breakout short sellers coming into the market, right? Yeah, there's short sellers entering the market just solely because we broke the low of this swing low and this swing low right here. Okay, extend right. Right? Swing low. Breakout short sellers are entering the market now. That's good news. That's good news for buyers that want to buy in this demand zone. Because if I'm a bank, okay, it's 8 o'clock, so it's 30 minutes before the U.S. market opens. This is the time where banks and institutions are kind of plotting and planning and cussing and discussing their moves for the day. They're seeing that they've got a free opportunity to buy right here because there's sellers selling to them. Unfilled orders, breakout short sellers, that's providing liquidity for buyers. And we got a 50 EMA coming through it on 2 hour. What's a 1 hour look like? Yeah, I mean, I like most everything about it. But guys, I'll leave it there. I don't want to cut into Nick's time because Nick's show is starting. Yeah, I mean, the reality is I personally want to see what happens with this 1 hour candle close. If we get a decent bullish candle, I may join you. So might even join you there. But guys, that's going to do it for now. If you guys can, come on over here to a1trading.com. Make sure to click over here. This should be playing if I refresh the screen. If not, you can watch on Twitch, you can watch on Kick. But yeah, just go to Trader Nick over on YouTube. Okay, Trader Nick. And yeah, I'll be on here a little bit. Hour 45 minutes for me. So with that, peace out, you guys. Hope you have a wonderful day, and we'll talk to you later.